I do apologize for that cutting off in the middle of my sentence. But just to recap what I was saying, this $1,800 that we're recording in revenue, that represents 20 of the 30 days of revenue that we've already performed. We haven't received that $1,800 yet, but we've performed 20 of the 30 days of consulting. So we would record $1,800 in revenue and have that asset accounts receivable there waiting. That means we've earned $1,800 worth of money that we haven't received yet. So the following year, for the last 10 days, we would record that last $900 of consulting revenue, and then either they would pay us right away in cash or that $900 would be added to accounts receivable to have an outstanding receivable of $2,700, which would then be paid whenever the bill is agreed upon. So down here, you can see the amounts. So the next step is something that I saw in the book, but we weren't able to go over a problem involving the posting the adjustments to the trial balance in our tutoring session. So I'm going to go over that real quick with these adjustments. So the adjustments are going to be labeled. Here, let me go right away. So this is the trial balance that I'm talking about. So there's the unadjusted trial balance, which I explained was the trial balance before any of the end of year adjustments. And then, so those are going to be these two columns here. And then the next two columns are going to be our adjustments. And then the final two columns are going to be the trial balance adjusted, the adjusted trial balance, which takes into account these middle adjustments here. So as you can see before, in the adjustments column, there is a letter beforehand which represents the transaction that we did. So this A, B, C, D, E, F, those are all the transactions we just went through. So if you have a question on one of the individual transactions, you can go back to the previous video and see those individual transactions. Anyways, I did break this down so we can go step by step. So this is kind of what we would have in a problem. We would have the unadjusted trial balance. And so for transaction A, if you want to go back, you can remember we had used some of the insurance up. So we debited insurance expense for 100 and credited prepaid insurance for 100. So as you can see, it's pretty easy. Now you're just transferring your transactions to this adjustment column. So if there was a debit, you put it in the debit. If there was a credit, you put it in the credit. Sometimes there may be more than one adjustment to the same account, at which point sometimes there'll be two open lines that you could put two of them and then you would just net them over in the adjusted trial balance, or sometimes you just net them right in the adjustments account, but I don't believe there are any of those in this case. So if you want to go through this and you can see where they go, I'm not going to go over every single one just because it is as simple as posting these adjustments from the last thing. So there's A, you can add B there for supplies expense and supplies. C, depreciation expense and accumulated depreciation. D, unearned consulting revenue and consulting revenue. E, salaries expense and salaries payable. And F, consulting revenue and accounts receivable. So actually, I was mistaken. There is one. So that's why there's two lines. See right over here, account 403, consulting revenue. How there's two lines because there's two adjustments that are made here for transactions D and F. So I'll show you how to net that in the next step, which is the adjusted trial balance. So basically what you're going to be doing is going across. So cash, unadjusted trial balance, debited 4275. There's no adjustment. So over here in the adjusted trial balance, it's going to be that same amount. Here, accounts receivable, it was $0 debit in the unadjusted trial balance. There was an adjustment for $1,800 debit. So debit of 0 plus debit of 1800 equals debit of 1800. Supplies. There was a debit of 9720 in the unadjusted trial balance. However, the adjustment is a credit, so it's 1050. So because this is a debit and this is a credit, we take this debit, subtract the credit, so 9720 minus 1050, and that equals this 8670. Same thing here for the prepaid insurance. It's a debit here, a credit adjustment, so debit minus credit equals this here. So basically you're going to go down each one, and you have to keep in mind if it's a debit or credit in the unadjusted trial balance, in the adjustment, and how that would affect. Like here, for unearned consulting revenue, it's a credit of 3,000 because it's a liability, so it has a normal balance of a credit, and you debit it for 250, so a credit, and then you would subtract 250 to get the 2750 credit balance over here. The what I was saying earlier is, like for this one where there's two adjustments to consulting revenue, it's $5,800 credit balance on the unadjusted trial balance, and then we have two credit adjustments here. So because this is a credit and these are both credits, we're going to add all of them together, 5,800 plus 250 plus 1,800, and that gives you this adjusted trial balance of 7,850. So basically you're going to go down and do that to all the accounts. As you can see, a basic principle of accounting is that debits and credits balance. So on the unadjusted trial balance, you can see that the debit balance and the credit balance totals are equal to each other. That same thing should apply in your adjustments column. So see 3710, 3710, they both equal. And again, in the unadjusted trial balance, 47,610, 47,610. If these amounts in any of these do not match up, that is an indication that you've done something wrong, or one of your additions or subtractions did not go through, or you just forgot to add one of these or missed something. So that is a good check. So that is it for that problem on posting the adjustments to the trial balance. So I'm going to just stop this here, and I'm going to make a third video to go over this exercise 3.3, which is located on page 145.